one of the most effective ways to mark your levels of interest and areas where you would like to take trades from is what we call multi-time frame analysis. Now, in this video, we're going to be looking at how to do multi-time frame analysis, but for only intraday traders, because we have different types of traders. We have swingers, we have position traders, we have scalpers, but in this particular video, we're focusing on intraday traders. Now, talking about intraday traders, it means that there are specific time frames that you have to use to take entries, to get structures you're going to trade. So in case you get them wrong, it means that many things are going to go very bad for you in the whole day, because intraday traders, you have to balance your trades within a day, or at worst, you carry it forward to the next day, but should not exceed that. That's what we define as intraday trading, right? So hello everyone, this is Paul from the APN Academy. If it's your first time coming across our channel, make sure you click the subscribe button and turn on the notification bell and give us a thumbs up for this video so as many people can come across it. Now, without wasting time, let's start with the very first aspect, which I've just hinted on right now, which is the time frames. Now, what time frames are you supposed to use, right? First and foremost, you need to separate these time frames into categories. The first one is you need to get the direction in which you want to take, right? Which time frame are you going to use for direction as an intraday trader? Then 2, which time frame is going to give you the structure as an intraday trader? And then 3, which one is for the entry? And then 4, which one are you going to use to refine your trade? You need all these time frames. This one is a minor. You may refine or you may not refine, but we need these first 3. This first one, the second one, and the third one. These are the most important 3 time frames that you need to identify, which is a very big problem for most intraday traders. And we all know almost 70% or 80% of traders in the whole world are doing intraday, which also is giving them difficulty. Now, the most hard thing that traders are facing, but they can't admit or realize it, is choosing the time frames. Now, for you to mark levels correctly, you need to know the time frame you're using for direction. Now, which time frame do we use for direction? This one is general for all traders. Monthly gives you the direction. Of course, we're going to do these things practically in the chat, so please stick around until the end. Do not skip any stage of this if you want to learn how to do proper market multi-time frame market analysis. This applies to anything, whether you're doing cryptos, whether you're doing forex, whether you're doing whatever security you want to trade, as long as it has candlesticks and has price movement. So make sure you stick until the end, until we're doing practical, and then you can see exactly us applying the things we're doing right now in theory. So we have said direction, we're using monthly. Then for the structure, we have 2 time frames for structure. We have weekly and daily. Now, since we're doing intraday is within a day, within 24 hours, you want to balance off your trades. Or even if you're trying to do the next day, it shouldn't go through very many hours. So since it is like that, we want to use the daily time frame to give us the structure we want to trade. By structure, I'm going to explain it further in the next point. By structure, I mean, what do you want to trade? Do you want to buy? Do you want to sell? Now, if I want to buy, what foundation am I basing on? It's just like building a house. If I want to build a bungalow, the foundation is not the same as if I want to build a flat. I can't build a complex the same as a mall. A mall's foundation is not the same as a house that a personal family is going to live in, right? So far we have solved the direction, then the structure. So meaning if you want to do intraday, you have to use daily, right? So and then when it comes to entry, we want to use H1. Now, someone is going to ask, why are you skipping H4? Why are you skipping weekly? Now, weekly, you can look at it in between here, but it's not important to an intraday trader. Then also H4, I'm just going to explain the logic here, which you can also apply to other types of trading, whether you're scalping or no matter the type of trader you are. If you want to choose an entry time frame, let me just give you a practical example. In a day has 24 hours. Right? Now, how many H4 candles are in a day? There are only 6 H4 candles. How many H1s? There are 24 H1s, right? 24 H1 candles. Now, most of us do not know how to take trades without using candlestick patterns. Most of us are still basing on candlestick patterns. Now, out of 6 candlestick patterns, a candlestick pattern includes 2 or more candlesticks. Now, by the time a morning star or evening star or which other one? Engulfings are forming in H4. There are already almost 9 hours that have gone. Remember, you're doing intraday, so it makes it difficult for you to use H4 in taking trades if you want to do intraday. By the time you're taking a trade, your target has almost been reached or it has been hit. Then that's when you find yourself taking a trade and then it reverses. Then you start saying, I do correct analysis, but whenever I take a trade, it reverses. These are some of the aspects that you're not looking at. You just want to follow the crowd that I trade using H4, I take trades using H4 because everyone is saying H4 is good, it's very solid and all that. Yes, it is solid, but not for intraday. If you want to take trades in intraday, you're supposed to use H1. Why H1? Because H1, there are 24 H1 candles in a day. So an engulfing, those are just 2 hours, meaning you still have other 22 hours. But, or even a morning star, there are 3 hours, meaning you still have more 21 hours. But H4, the moment a morning star or evening star forms, those are 3 candles to make up a morning star or an evening star, meaning you're only left with 3 H4 candles. When are you going to trade? There are reversals there, there are retracements. You're going to get frustrated if you're using H4. So our entry time frame is H1 if you're doing intraday. Let me just wrap this to make it clearer. Our entry time frame, once again, I'm repeating, is H1, right? We're using H1 for our entry. Then for refining, this one is not a must. For refining, you can use M30 and you can use M15 to refine your trades. By refining, I mean to take a better entry. For example, if there's an engulfing in H1, you may find you could have taken an earlier entry with proper structures in these time frames so that by the time, even if a trade is to play around, you're already safe and maybe you've protected your trade with very many pips, right? By the time it starts playing. That's what refining simply is getting a far better entry compared to if you're basing just on H1. So these are the time frames that an intraday trader needs to use. One, you have to have a direction, you have to have a structure, you need to have the entry time frame. So we start from monthly, you can also go through weekly, but the structure we're going to be interested in is daily. Then we shall use H1, not H4, please. We shall use H1 to take our trade, to look for change of trend. But if the change of trend here is not clear, you can drop down to minute 30 or minute 15 to look for that week retest. Remember, we want to see week retest or change momentum when we come to entry time frames. And if the entry time frame, which is H1, is not giving it to us clearly, you can drop down to refining time frames. Are we together? So this is the first aspect that you need to put on a lot of emphasis. Now, the second one is the structures. I hinted it a bit. Now, structures, there are very many. You can have a W, you can have M's, etc. We have types here, 3 each. We have done which is double bottom. We have done with a higher low. We have the one with a lower low like this. And then also the M is just the opposite. Then also we have impulses, right? We have impulses whereby if the market impulses, we expect a correction, then the market continues down, right? So we also have head and shoulders, inverse head and shoulders. We have trending markets, right? So you have to identify these structures. Which one are you trading? And also you have to determine, are you trading, are you a continuation trader? Are you trading continuations? Let me just write it here. Oh, what's the spelling of continuation? Sorry. Continuation, right? Are you trading continuations or you're trading reversals? These ones can be reversals or retests. You have to be clear on this, right? So if you're doing intraday, I would advise that you do continuations, because if you're doing reversals, sometimes you're going to get trapped into it. And remember, you just have the balance of your trades within the day, right? So simply, you have to choose structures that are going to favor you, and also the direction. You have to choose down that is going to favor you. For example, continuation favors a lot more of intraday traders, and also position traders and swingers. But reversals, retests, these ones favor a lot of scalpers, because scalpers are staying in a trade for a very short period of time, right? So why do we have to select a structure? Because it's going to give us the area of interest that we're going to look for entries from, right? I've just told you that you need to get a structure to give you a reason to take a trade, either buy or sell. You cannot just say that I think now the trade is going to buy, or I think the trade is going to sell, right? So these are the two aspects that you need to consider. But now let's go and do these things practically on the chart. But before we go there, I would just like to give you a hint on what we're going to do on the chart. For example, let's say if monthly, we had a turning point, the market went up. This is a slab, meaning this is our support area. Again, the market comes back here and the market is rejected. Again, price comes back here. Now we are here, right? So what direction? Because we have said monthly is for direction. So what direction are we going to be looking for? You can give it a guess. I'm giving you 2 seconds. Give it a guess. Yes, if you said up, you're correct. It means that this is the first touch, second touch. So when it has come here, the market is telling us this is a strong level. So there are higher chances we could push up. So that's the direction. Then you can just slightly go and check weekly, but if you don't want still, you may skip it. And then you go to daily, right? Then you look at, since we are looking for buys, meaning also they were looking for buys. For example, if you go to daily, you may find that there's a W and the market has already tested the neckline. And we know that since there's a W, we expect buys. On the retest here, we expect to take buys. This shows you that monthly, your direction and your structure are speaking the same thing. These are the good trades that we're looking for, right? You want to look for structures that are aligning properly with your direction. Now, also after getting this and you go to your entry time frame, which is H1, right? You want to look for buy confirmations, or you want to look for momentum that is weak on this retest so that you can take your trade. In case you can't see this in your entry time frame, that's when you drop down to minute 30 or minute 15 to get a better entry or to spot a better place to take your trade from. That's what we call refining. Now, this is what we sum up as multi-time frame analysis. Now, this is what we're going to do on the chart practically, right? So let's just drop down there. Once again, the structures are many. You can use any structure. You may spot an M, you may spot a W, you may spot a head and shoulders, you may spot an impulse, or you may spot a trend. You may want to trade with a trend, but also make sure you identify what you want. I've already advised you that an intraday trader, you want to trade continuations, not retests. For example, I mean that if the market is making higher high, higher low, higher high, as an intraday, you don't want to trade this retest. You want to wait for it to come back here and then you can take the trade as a continuation. I hope that makes sense. So this has been theory. I hope you guys understood it properly. I like usually explaining so that when you get to the chart, it is easier for you. I've seen many people in groups, other groups, and also forums saying that when I am learning or watching videos, it's easy, but when I get to the chart, it's very difficult. That's why I want to explain in detail so that you understand, and also when it reaches the time of implementing, you can see clearly exactly what we're talking about. So let's just go to the charts, then we can clearly observe, or we do it practically. We backtest what we've just spoken about so that it will make further sense to you. Okay, so I am on my trading view. So we're going to do our backtesting on GBP New Zealand. We're going to apply and implement whatever we have spoken about in the theory part, right? So I would like you guys to be attentive, follow from where we're starting from until the end, and you see whatever we spoke about being implemented. And make sure you also go and backtest on your own and you see exactly how you do this intraday multi-time frame analysis. Now, as usual, we are going to start from monthly. You can see my time frame here is monthly. So we said that we need 3 time frames. We said we need monthly, we need daily, and we need H1. But in between here, we're going to just check weekly just to see what is happening there. If you want, you may leave it out, but I just advise you that you don't skip it. You just look at it and see if it is confluencing, if it is speaking the same thing with monthly, right? You're not going to use the structure you're seeing there, but just going to help you to align monthly and daily, just to make sure that all of them are speaking the same thing. But the major thing we're interested in is daily, right? So we said monthly is for direction, right? This is for direction. And then we said daily is where we're getting the structure we are trading. By structure, I mean if you see a W or you see an M. Now, this structure here you're seeing in daily must be aligning with the direction. If the direction is up, it means we are supposed to be looking for buys. Now, when you come to daily, the structure you're interested in must only be a buy structure. For example, a W, inverse head and shoulders, a higher high, higher low when the market is trending upwards. Those are the only aspects you're looking out for. Anything other than that, you're not interested, right? So let's just get straight into it. We shall get our slab here because we do have a W here. So I'm just going to mark this neckline here. Someone who does not see a W, this is the W I'm talking about. We have this W here. Let me just change the color to blue so that you can see. We do have this W here, right? The market came down, went up, came down, went up. So we have broken this neckline. Recall the rule of a W is we need the neckline to be broken. So what does the W symbolize? The W symbolizes that when we retest this neckline here, we are going to push up, either to make an equal high or to break it and come to this high here. So what's the direction? The direction means after this retest here, we're interested in going upwards, right? So meaning we're interested in looking for buying structures. Now, when you drop down to the weekly time frame, right? When you drop down the weekly time frame, it's speaking the same thing. This weekly says that we had an impulse here. The market gave us a retracement and then gave us a double bottom. After double bottom, also the market created a small W here and made an impulse breaking this area here, meaning weekly and monthly are speaking the same thing. Are we together? So we are all interested also weekly to come back here and push up. But remember, we have said weekly is irrelevant to us because we're doing intraday. But we just wanted to use it to align, right? Now, when you drop down to daily, the time frame we're interested in, remember daily is giving us the structure we are going to trade. Now, interestingly also, when you come down to daily is showing that we did have a very strong level of resistance here. The market was dropped down. Price came back, it was pushed down, came down, it was pushed, came back into this area, it was pushed back down. Let me just change the color to red. It came back into this area, it was pushed back down. Now, when price came into this area, this time around, it just broke. Now, I'll give you guys a trick. When you see a wall being overknocked, let's say a house that is being overhammered, there are higher chances the wall will weaken and it will be broken. The same applies to a level in the market. When you mark a level and you see price overcoming to it, right, several times, it means it is getting weakened. Not always, but it means the higher chances very soon that level could be broken. It's exactly what we saw happening here. The level was broken. Now, we can clearly see monthly, weekly, and daily aligning, though we're not interested in weekly. So we have a direction, which is upwards in monthly. When you come to daily, we have a very strong level here, which was aligning with all the time frames being broken. So what are we interested in to take our trade? We're interested in the market to come back here to give us this retest, and then we can push up. But now, where are we going to observe this retest from? We're going to observe it in our entry time frame. Which one is our entry time frame? Our entry time frame is H1. Remember, we have said we use H1 to take our entry. Then if you want to get a better entry, to get a better entry than this one here, you can refine further and use minute 30 or minute 15. But we're going to see what this price will give us here. We're not going to guess. So our entry is H1. We're going to go to H1 and we can monitor how price comes into this area and changes trend. When it changes trend, we can refine to get a better entry in minute 30 or minute 15. So let's just go to our entry time frame, which is H1 in this case, not H4. Do not do intraday with H4, right? So let's just play here. We are interested in the market coming back into this area here. If price comes back into this area, this is when we can look for a buy entry here. So I'm going to just play. The market attempted to come back here. We see buyers trying to reject because we have a sell candle here. So let's hope it reaches that area. Whoa, it misses it. The buyers pushed the market back up. Now, in this case, most of you are going to express what we call FOMO, fear of missing out trades. It's better to miss this trade, right? For example, if this trade does not come into this area here, we're not interested in this trade. We want the market to come into this area because this is the area that has been broken. We want the market or the price to come back into this area. If it does not, leave that trade, please. Leave the trade. Do not force the trade. It takes time to develop that discipline, but it's better you start it early. Develop it early while journaling your trades. So now in this case, the price has gone away from us. Let's try to still forward play it and we see if after came back. Let's hope it comes back because it has developed a W here. So let's just hope it comes back. Okay, the market is being rejected again. Okay, it's trying to. It's again going back up. If it doesn't, then we shall leave it. Okay, it's coming back down. It pushes away. Let's see. Okay, it's coming back into the. Now, this is the first time the market touches this area here. So I just want to show you guys here how you take trades like this, right? So you can clearly see the market, when it was up here, it created for you an M, retested the neckline. You know the rules of an M, retested the neckline, made a lower low, lower high, lower low, lower high, lower low, lower high, lower low. Then it has made this lower high here. So what are we interested in? We're interested at least the market giving us either a shape, either inverse head and shoulders or a W, taking out this level here so that we can be able to take our trade up here, right? So we shall just see what the market gives us. Now it kept pushing down. Let's see what it gives us, right? We want at least a double bottom or inverse head and shoulders. Now here the market has given us this W here. Are you seeing this? This is a W. The market gave us W. Let me just change the color to blue. The market gave us this W here. Okay, it's not coming out still. So I'll just change it to black. The market gave us this W here. Hope you guys can see. So the market is yet to break above this level. Now this is H1, right? For you to get a better entry, it has already broken this neckline, but for you to take a trade, you want it to break above here. Now for you to get a better entry from where it is, this is when refining comes in. You need to take a trade before it actually attempts to break this, because the neckline has already been broken. You know the rules of W's. This neckline here has already been broken, this one here. So you can refine it and get an entry in a lower time frame, right? So this is when minute 30 comes in, right? Now I'm just going to delete this because it has already given us the purpose. It has already served the purpose. So this is the double bottom I'm talking about here, right? Now, when you refine it into minute 30, right? So minute 30, you can clearly see this is a double bottom and it created the mini M, but the neckline has been broken. Are we together? So in minute 30, we can clearly see the price has broken above this area, meaning you can easily take your trade. Yet if you're to stick to H1, H1 has not yet broken the level you're supposed to take at. If it was H1, let's just slightly go back to H1. In H1, you're actually waiting for it to take out this area here, which it has not yet. This is the advantage of refining your trades, right? You see, it has already taken out this area here. But now the advantage of minute 30 is it has given you double bottom and has taken out the neckline, right? So when you come to minute 30, you clearly observe that it has also taken out this high here that it had created. So we're going to take our nice trade just at the current market price, and our stop loss will be below, a few pips below this structure here, right? A few pips below that structure, and we want a 1 to 3, right? Just a heads up, we usually set our targets in daily. So I'll just go back to daily. Now daily, we want to take our trade. We want to take a trade until this turning point here. Why? Because this was a turning point. The market made a false breakout, so the higher chances it could come and test and then it drops back. So I'll come back to minute 30 where we're refining from. So our target is actually going to be, you would have a 1 to 3, but in case you didn't have a 1 to 3, you would put it to push up to here, but I already have a 1 to 3, right? So let me just, actually, since I have a bigger slot, I can just extend the stop loss. So it gives me enough breathing space here, right? But if you want, you can put the target up here. Usually make sure you put the target slightly below it so that, so this is a 3 to 7, so I can extend my stop loss depending on the size of my account. So now let's see how this trade plays out. In case it hits our stop loss, it is fine, but we have done everything necessary. We have gotten the target nicely. We have the risk to reward ratio, and also we do have our refined trade. We did from monthly, we got the direction was upwards. We came to weekly, it was aligning with the monthly, though we're not interested in weekly. Then we got our structure in daily, a strong level of resistance, which was like a wall had been broken. Then we got the retest into the area of the broken resistance, which is now support. So, and we have gotten a change of trend here. Now this is when we're taking our trade. So I'm just going to play it and then we see if we hit target or not. Right. So let's see if we hit target or not. Okay. Let me just extend here and see if hit target or not. So far, not bad. Okay, we missed our trade. So in this case, sometimes you can just simply, when the market tries to again change trend here, you can just go out of the trade. But to develop discipline when you're back testing always, you should just leave and plays out, because it's usually important to, because here, remember this was 1 to, so you saw the past 1 to 3, right? So you can just take your profits from here, but just for learning purposes, let's see if it reversed and hit our stop loss, because we already set this take profit. Remember, the rule is after setting your take profit, do not adjust. But in a real live market, if you see it breaking this level here to change trend, you just go out, because to change trend from here. So actually, when the market again confirms a trade here, you can just take another trade, right? So I'll just check here. The market came back here. Now, when this market breaks above this area here, we can actually add a trade. So let's see if it will do that. So I'll just play. Let's see if it will hit our stop loss or it will shift. So it attempted to break above and came back down. So let's see if, okay. So it again broke back above. Now here, this is just for people who want to scale in and add in more trades, right? So your entry is actually going to be when it breaks above here. So with this candle here, we take another trade. This time around, your stop loss is around here. It's just going to be below this structure here. Okay, we shall just put it below this structure, and you can put it at this target here. We want always a 1 to 3. Okay. Now, one thing we can observe here with this trade is you can observe that it's not giving us a good risk to reward ratio here, right? So we can refine further into minute 15 to see how we can get a better trade. So when you refine again, we can see that it's giving us the same entry here. So let's see if we can get a 1 to 3 here. If it doesn't give us a 1 to 3, we're just going to leave it. So this trade is not, the second one is not giving us a 1 to 3. So what do? We just have to reduce our stop loss, and we're going to leave our stop loss around here. So if it hits it, then we shall remain with the original trade. So let's see what happens, right? See what happens. Okay. Played around, then finally hit take profit. So both our trades did hit take profit after getting the analysis from all the other time frames that we mentioned in theory. We started from monthly, we went to daily for structure, H1 for entry, and we have refined, right? This is how we do multiple time frame analysis. If you're an intraday trader, make sure you always have a structure in a bigger time frame. It doesn't matter whether you're going to refine into M15, but I usually don't advise you over refine. Some of you want to over refine and even go up to minute 1. Some of you even go to seconds, which is it's okay if you have experience with it, but if you're just beginning and you've been trading for some few years, please do not do that. Just refine up to minute 15, then you can be able to have at least comfort in your trading. Remember, trading is all about how comfortable you are and how, because that comfort that you're trading with gives you the confidence. Without confidence, you're going to always panic. You want to enter trades quickly. You want to exit trades quickly, and then you end up not making money, right? So I hope you guys made sense out of this video, or you got value out of it. If you did so, give us that thumbs up button. It really helps us with the algorithm. Or if it was your first time coming across this video, make sure you do click that subscribe button so you do not miss out on the upcoming videos. That was it for today. Have a great day.